Hey friends, been a while. My old laptop died while I was in Manila, unfortunately. So I have a new one. It's taken a bit of time to get this video stuff going again. But today I wanted to share the Rhino trade. This is a trade I've mentioned that I really like. It's my version of it. It's not the original Rhino, but it resembles the original Rhino. I've never taken the SMB class, so I'm not sharing anything proprietary today. There's a lot of moving parts to the Rhino trade, and I think it'll be easier if I just explain it as we trade through an example. So what I'm going to do is I'm going back to July 3rd, and I'm going to start a fresh trade using historic data, and you can watch me as I trade through the Rhino. But the basic idea is it's a delta neutral trade, like a broken wing butterfly, if you've watched that video that I did. And it does start out as a broken wing butterfly, but we don't let deltas get too far out of control. If things get a bit out of whack, then we're looking to correct that. I usually trade this in the rut. It's really suited for higher priced underlyings, and you can see the Russell is quite high priced. You can do this in something like the IWM, which is also the Russell. This is the Russell as well. The IWM is 10 times smaller, so you can do that in a much smaller account, but the commission churn, because you'll have 10 times the number of contracts, is going to be a problem. So if you want to do that as you're getting comfortable with the trade and keep risk low, that would make a lot of sense. But I wouldn't hang out there once you're comfortable with the trade. I would be looking to move on to the rut. So for this example, I'm going to trade it as a $30,000 trade. And I usually have two on, one of them half size. So that's $45,000 that I would have in an account while I'm trading this Russell Rhino. And yeah, so let's go ahead and start though. So it's July 3rd. We're going to enter our Rut Rhino. It starts as a broken wing butterfly. It starts half size, so that's 15,000. And I only use 80% of that for the broken wing butterfly. So that's 12,000. I like to use deltas to build the broken wing butterfly, and that makes this work in really any underlying of sufficient size. So I use 50, and then I sell two of the 35s, and then I buy a 20. Right? So that's my broken wing butterfly. I'm going to analyze that. I'm going to right click and hit analyze. Okay, you have to make sure if you're using on-demand mode in Thinkorswim, you have to make sure this date matches this date, and you pretty much have to track it. And we're mostly going to be looking at this purple line. This is the T plus 0 line. This is the theoretical P&L of the position on a move up or down in the rut, in this case, or whatever your underlying is, assuming that nothing else changes. The blue line is your expiration graph, but we don't hold these trades to expiration. So we're just looking to flatten this line, and the line, you'll see it move up over time as profit comes into the trade. Now you can use Thinkorswim Analyze, it's free. This comes with Ameritrade or Schwab. If you don't have those brokers, you can pay for a program called OptionNet Explorer. I am not endorsing them in particular, but there is no other software out there at the moment. I will have another potential at the end of this video I'll talk about, but for now, it is a lot easier to do this trade if you have these analyzed graphs. I grabbed those strikes off the deltas, but you can see the aggregate here, this middle line, the delta, that's the delta at the money right here. This line here is the middle row. So minus 1.3. Some traders like to carry a little negative delta. I do not. So I'm going to move the strikes around to, there we go, basically zero. So I'm happy with that. And I'm going to allocate 12,000. Well, the trade is, max loss is 33.70. So I can do 3 contracts and stay under my $12,000 budget. So that is what I'm going to do, right? And we're going to just keep accumulating these simulated orders over time, and that'll keep our P&L accurate. So if we do trades that close one leg and reopen it somewhere else, it won't throw off the P&L. It'll all be accounted for, if that makes sense. So I do this even in my live account, actually. We're going to lock it. So we'll say we placed the order. We've got our butterfly. So what do we do from here? In this initial half size phase of the trade, what I'm looking for is if we drop below the shorts, I'm going to roll the whole structure back. If we move above the longs and we have -5, maybe -10 delta, it'd be even better. Then I'll be looking to do a delta adjustment. Hey guys, I forgot to mention the other rule that I follow is If we get a huge move to the upside, theta can drop, and if it drops below the dollar amount, right? So $15,000 half size, $15 of theta. So if it drops below that threshold, then I tend to pull everything off and roll the whole structure up. Or full size, $30,000. I'm looking for $30,000 theta minimum. So just one extra thing. Also, this is a brand new channel. So if you find this stuff interesting, you want to follow my journey, how I trade, or my travels around the world, please subscribe. That would be awesome. Anyway, back to the video. Right, so I'm going to move forward in time until one of those conditions triggers, and I will see you guys there. All right, so it is now July 6th, and I've tracked the date here. And you can see this middle line is the market. It has crashed below those short strikes. If you want to see what the chart looks like, right, we've had this big down move. And what did I say the rule is? If it goes below the shorts, it's to roll the whole trade back. So we're going to analyze the opposite trade at the current price. So I lost a bit of money. I'm down 330 in the trade, and I'm putting on a fresh butterfly just like we were entering today. So September, and I'm going to buy the 50. I'm going to sell 235s, and I'm going to buy 20. I'm going to right click, analyze, unlocking the price until we're done. And delta's flat. That's fine. It's it's not at zero, right? It's down because we are down because of these earlier trades. So I'm happy with that delta. And the max loss here is 36.55. That actually includes, right, that loss. And we're going to get this up to 12 or less by doing 3 contracts again. So there we are. There we're good. And I'm going to go ahead and submit this order. So what happens now? Well, I stay in the trade until we drop below the shorts. We go up here, and then delta or theta causes me to make a decision. At 56 days to expiration, I'm going to say we'll be scaling into full size. Normally, I would do it anytime that the front month comes off, and we're assuming this is the back month, if that makes sense, but we'll just say 56 days. So I'm going to move forward until one of those conditions triggers again, yeah? Okay, it's the 7th, but I just wanted to show, like, we had this huge up move. It bounced. That can happen a lot. So we are outside, but our delta is too low. Anything below -5, really, there's nothing I would do. And theta is 15. That's still fine. So I'm going to leave it alone. All right, so it's the 12th, and as you can see, the market has just rocketed higher. And we're so far away from the tent now that our theta has dropped to 8.7. So the theta is too low. And what I do when the theta is too low is I roll the whole structure up. So far, this is like a looser version of something like the net zero trade, if you're familiar with that. But it's a roll. So again, I'm just going to close the butterfly that I was in for a loss. And I'm going to put on a new one using 50, selling 235s, buying a 20, right click, analyze trade. I'm going to unlock the price until we're done. And delta's a little bit negative, so let me tweak the strikes around. 0.06, that's close to 0. I'm happy with that. We're using close to 4,000. I can do 3 of these again. So I'm going to ship it. So far, we're down, yeah, about $550 in the trade. And for reference, my profit target on these is about 10%, and same with the max loss. So on a $30,000 trade, like we're doing here, that's going to be 3,000 profit or lost. So $600 isn't that big a deal, right, in the scheme of things. Okay, well, now that we're in it, you know the drill. If it drops below the shorts, then I'm going to roll it down. Out here, I'm looking to manage delta, or I end up rolling the whole. If we get big moves in the market, that's usually what ends up happening, because the line is so flat that we don't really need to keep the line flat. It already is because we have a long DTE trade, but we do want to keep our theta reasonable and keep our risk far away. So with that said, I will move ahead and see you at the next change. Okay, we've just been hanging out here above the tent. Now, it does surprise people sometimes who are new to this style that this is actually a good place to be. So what's happening is, as time passes, the distance the market will move, the Russell will move by expiration, well, there's less days left. So that distance gets shorter and shorter. in terms of what's likely to happen, right? When you've got 90 days, how far will the market move versus 60? And so what's happening is you're more likely than yesterday to land in here, and you're less likely than yesterday to land in here. So that's why theta is actually positive. And theta is still pretty healthy. Our delta is not over -5. There's really nothing I can really do here on that, but everything is fine. But we are now 50/60 ETE, and I said I was going to pick that as the day that we would end up scaling into full size. So we need to add another set of butterflies, and now we're going to be the full 30,000 allocation with 24 for the butterflies. So as before, I'm going to come in here, buy 50, sell 235s, and buy a 20, and analyze that. 24, and oh, actually, let me tweak. Let me unlock that first. So let me tweak this lower 1860. So without this, we have -4 delta. Adding it's a little bit of positive delta, but I want delta to be 0. So we might as well flatten delta out while we're in here. Okay, so we're having trouble finding exactly what we want. So I'm just going to leave it at +5, but you could split the order, right? You could do 3 butterflies with 1 set of strikes and then 3 that's like 10, 10 off, that kind of thing if you want to be exact about it. I'm going to run a little bit of positive delta. It's an arbitrary choice. So we're going to go ahead and ship it. Oh, wait, actually, we're over though. So yeah, I'm going to go with 4, ship it. Okay. Right, so we're still down about 500, not the end of the world. Theta is very healthy now, 50. So anything over 30 is gold. Really 24 at this stage is fine. Delta's close enough to 0. And from here, the rules are very similar. Anywhere between this lower short and this upper long, I'm mostly just letting the trade play out. Below here, I pull off everything and I put on a $24,000 BWB to the down to wherever the market is, 50, 35, 20. Above the short, I'm looking for delta to hedge off, and if theta gets below 30 or certainly 24, then I would pull the whole position off and put on a $24,000 BWB up in that area. Now the profit target, I carry $3,000 up until 35 days to expiration. Below 35 days to expiration, I cut it down by a quarter. So it's like 20, like 2250, 2200, call it. And then below 28 days, I cut it to half, so $1,500. And then below 21 days, I just take what I can get for the most part. And it's a lot more by feel at that point. So just reducing the profit target as I get closer to expiration, because I don't want to be holding this thing into the last couple weeks, because you'll see this curve of this purple line would get very exaggerated at that point, right? All right, so anyway, moving ahead until I have something to do. Okay, so now we are just barely outside of the tent, but we have -6 delta, so we could hedge that off. And theta is still very, very healthy. We're pretty close to the upper long, so I could certainly debate just leaving it on for another day and seeing which way it goes. But let's go ahead and do an example of hedging. So there's really 2 options when it's time to hedge off delta that I use the most. One would be to add a put credit spread, and one would be to add a call calendar on the upside. And we talked about calendars briefly, but calls above the money are bullish because you want the money to head towards the calendar. Put credit spreads, the very first thing we ever covered in this on my channel. So let's go ahead and take a look at both and see what they do. So we want about 6 deltas, right? So first, the put credit spread approach. I like to step on the upper long. It saves in commissions in the long run. So that's 1980. So I would come in here. And because we only do this when we're above the butterflies, it's always going to be below us. We're going to sell the 1980, and we want 6 deltas or some multiple. Like you could do 3 deltas and do 2 of them, but 6 is not a whole lot. So we can see it right there. And I'm going to go ahead and analyze. All right, so This is our first option, and you can see, theta is fine. Delta is now basically flat. You can see what happens. It lifts this upper line a little bit, and it pushes this down. It kind of pushes everything down, but it mostly is pushing down over here. We're still well under 30,000 with this adjustment, so that's totally fine. Right? So there, before the adjustment, after the adjustment. Right? It's subtle, but it's there. And if we do a couple of these, we'll have no risk to the upside. But for now, we only have enough delta to put one on, so we could do that. The second option, and this is good if you're more worried about a runaway market to the upside. Right? Neither of these adjustments is inherently better. I almost always use verticals in that initial half size phase instead of calendars, but calendar is the other option. So there's two ways you can do the calendar adjustment. The first way I like to do is, so September, I always use monthlies. September is going to be our short for the calendar. It's the same expiration as the trade overall, which means October is going to be our long. So I come to October. On the call side, I find the 40 delta, and that's the strike that I'm going to buy. We'll go 2040 because it's by divide by 10, right? So we'll use 2040. So 2040 I'm buying, and then 2040 in September. That's the call that I'm going to sell. And we use calls on the upside because calls are more liquid to the upside. It's easier to get filled. That's the rationale. So if I analyze this, all right, I've taken the vertical off. Adding that one calendar flattens our delta. Right, so here we are, no calendar. Here we are with the calendar. No calendar with calendar. See, the purple line changes. It's subtle, but it's there. And our delta goes from -6 to flat. Theta actually goes up a little bit. This would totally work. Now, the other option, you could come in here and say, hey, you know what? I think this 2030 is a price level, right? It's the old high. So that's where I want to put that upper peak. I'm setting the range between the lower peak, where we would roll down, and this upper peak, where our adjustment peak is going to be. So 2030. It's not going to be very different, obviously, than what we just did with the 40 delta. It was, now I just changed it here to 2030. I'm going to analyze that. It's obviously not going to be significantly different than the other calendar, but again, before, after, we still have a little bit of negative delta doing it with the 2030, but it's still, yeah, but it's bouncing around plus or minus, okay. So 20 versus 30, it's fine. Here's the one we use the 40 delta, right? Also fine. Here it is with a vertical, also fine. Any of these would be totally fine, right? 25,000, very, very minor. I'm going to use the calendar. We're going to ship it. I'm going to delete these other examples. And that's our new position. I just went ahead to the next day, but what I will do on the upside with calendars is if we hit the calendar strikes, then I'm pulling these calendars off, and then I'm making a new adjustment decision for the overall trade, right? Or if theta is getting too low, I'll push the whole trade structure up. And I mostly want the theta to be coming from the butterflies. I don't want to be like way up here with a bunch of calendars on. Still very healthy. Our P&L is basically fully recovered from all of that rolling around that we had to do. I just wanted to mention that October is now 80 DTE. So anytime from now on, I'd be looking to enter a half size starter position in the October expiration. Our front month is full size. The October would stay half size until pretty much until this trade came off. So just making a note of that, but we're just going to do the one trade today. So anyway, moving ahead. All right, so we've rolled back inside of the tent, and at this point we have positive delta. And what I will do is, if we're in the tent and our delta is positive, then I will consider pulling off calendars that I have. We will take a look at that. It still leaves us with a little bit positive delta, but that's fine. So I would go ahead and ship that one. All right, I just wanted to check in. It's kind of like ground back down inside the tent. As you can see here, it's just been kind of grinding down. And we are now up about $1,200. Profit target still 3,000, but we have a nice healthy range where we're going to be in profit. So All of our patience and our early jumping around and sitting on small losses, in this case, is paid off. Not all trades will be winners, and this one isn't over yet, but this is pretty typical of kind of late stage. So I'm going to continue on. All right, so it's August 11th. This is 35 DTE. So after today, I am looking at 2250 as my profit target. We're still, for the most part, kind of grinding down. All right, so it's the 16th. We've ground down just below that lower short. So I'm going to reposition everything down, but we're up $1,000, and that's net of even all the losses we were taking in the early stage of the trade, right? So we've got two butterflies to reverse. We've got this one, analyze the opposite trade, unlock the price, and then we've got this one, analyze the opposite trade, unlock the price. So these are the current prices. If I close both of those out, I'm up now 1120, and it's time to put on a fresh one. Now, 30 TTE, you could just take the money and run. One K on $30,000, that's 3%. I think that's probably fine, but I'm going to do it kind of by the book and put on a fresh position. So that's going to be 50, 35, 20. Right click, analyze trade. We're looking at the delta, 0.9. That's going to be probably as good as it gets. Actually, let me show you a split trade. So I would just analyze the exact same trade, right? And then maybe I put on a 5 lot and a 6 lot. So that's 11. But the difference is this one, I'm going to use an 1810, right? Unlock. I haven't shipped either of these yet. And now my delta is pretty much 0. So I'm going to do that. Boom, boom. There's our position. Anywhere between this red line up here and this red line down here, this trade's in profit according to the model. Now, other things can change that, but it's fine. We are currently 30 days out. In 2 more days, the profit target will drop to 1500. All right, it's been our 2 days. So now my profit target's 1500, but we're around 800 today. So we're gonna keep going. All right, so we're below the shorts. Yeah, we're up 660. By the book, we'd roll it back. I think I would. 660 is well below our profit target. So yeah, we'll go ahead and do that. Analyze our closing trades. Haven't shipped them yet. Okay, so ship it and ship it. Oh, we bounced. We bounced. Okay, well, we're up 1,000. Right, so now we'll put on a new one. As we're getting closer to expiration, these are going to get narrower and narrower with the deltas. If you wanted to go wider, that's fine, but I'm buying a 50. I sell 235s, and I'm going to buy a 20. Take a look at that. All right, delta's -1. By 1760, it's +1. So kind of the same situation as before. 11 of these is too much, so 10 of these is good. I'm going to do the same thing I did last time. So less than 24,000 used. I've done this to split strike, and I'm going to ship them, right? And now anywhere between here and here, we're in profit, nice and balanced again. Theta is very high, so $1,000, and we will continue on. So it's the next day. We're up over 1,500 at this point, so I would just go ahead and close the trade for a profit here. You can see that it's, we still have a pretty wide range where the trade is very healthy, but yeah, I'd be happy with 1,500. So I'm going to analyze the opposite trade on both of these. Haven't shipped them yet. Okay, so 1695, yeah, ship it. And there we go, 1635. So it's a $30,000 allocation, although we never got much over 24,000, but if that's the amount of money I have set aside for this, then that is a 5% return. So that's an example of how I trade the Rhino through a pretty challenging run, right? Because I put it on, it went against me just enough to trigger a roll down, just in time to then take off to the upside. Had to bring it up here, and then it rolled over and came straight down after that. So, had to roll it back again. But despite all of that, I'm over 2% a month in this example, and that's kind of what I'm going for in my trading as well. So yeah, hope that was interesting. If you have questions, hit me up down below. If there's stuff you want to see, let me know. Like, subscribe. It's a new channel. It would really help a lot and encourage me to make more videos. Hey guys, I forgot I was going to mention the other option is not available yet, but I am working on my own analyzer, so hopefully it'll be ready someday. But it's really bare bones as you can see at the moment. But I've just thrown in a broken wing butterfly 50-35-20 in the Russell today, expiring January 19th. And there's the analyzed plot and the T plus euro. So yeah, I'm going to work on this and hopefully eventually I can share it with you all. But it's worth looking at OptionNet Explorer because that has a lot of features that I have no intention of replicating. And certainly worth using Thinkorswim if it's available to you. All right. With that, see you next time.